Ladies and gentlemen of the crypto space, we're live on a Wednesday, August 25th at 11:30 a.m. right on time today. Bam! That's how we do it. Today's topic is Avalanche, and it's awesomeness and how to grow your wealth. You know, interestingly and obviously, we have extensive experience. Folks that follow me know we play Polygon. No, we play Ethereum, and no, we avoid Binance Smart Chain like the plague. But what do they all have in common? What do you do? How do you think about all this stuff? What you have is opportunity overload. You have stuff on my shoulders. I picked the wrong color shirt today. But what you have is just endless opportunity. And the appropriate thing, the rational thing, is to take your time and is to not rush into things. Um, and there's a couple of different strategies. Everyone knows my ideology involves yield and interest and risk minimization. And how incredible is stablecoin positions that produce or emit asymmetrically appreciating assets? That's just ridiculous. So Avalanche is the new hot thing on the block, obviously because of their incentive program that's going to drive it. It's already driven $1 billion plus worth of capital over the bridge, and that's extraordinary. We saw this happen with Polygon, and we foreshadowed that by what happened with Binance Smart Chain. So Avalanche is just getting started. Now, that doesn't necessarily mean to deploy capital as in take stables and swap them over to a volatile asset that goes up in price and down in price and so on and so forth, where you have to have extensive technical analysis capabilities to be able to deploy capital at strategic times. But you don't have to do that, and you can make a large amount of capital doing that. Now we did that, we have done that, and folks will continue to do that. And you guys know I do my technicals, and we played Polygon very well. That was a massive breakout from, what was that, 30 cents to 70 cents to a buck 70. That was an extraordinary experience, life changing. We called that play by play. That was a massive sim triangle. Massive sim triangle. And now Avalanche is obviously breaking out significantly. Let's see how much memory my computer can handle. I so need a beefy computer. So let's take a look at the Avalanche chart real quick. Obviously, I have up um, Frax chart, which is doing ridiculous. Um, I guess that's probably something I'll preface. So let me get into the stream and I'll preface a couple of things before we look into the Avalanche ecosystem. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Oh, I didn't even show you the Frax chart. Anyway, we the people, Avalanche, passive income machine. Yes, but so is everything else. That's probably a great statement to preface everything we're going to talk about. Opportunity overload is everywhere. And it really comes down to macroeconomic conditions. You want to play Avalanche, you need to understand what's going on with macroeconomics. You want to play Polygon, macroeconomics. You want to play Ethereum, macroeconomics. You want to play anything. You want to play the stock market, the bond market. You need to understand macroeconomics a little bit. So I give my high level. You guys see my tweets, and all things indicate continuation. And there's plenty of reason to suspect we could have a temporary, significant deflationary impulse, which will just collapse all risk assets. Are these risk assets? That's another question. Very decent question, I might add. But ultimately, they'll have to monetize, and they'll just drive assets through the stratosphere because ultimately debt to GDP. Anyway, I digress. Um, Let me look at the comments real quick. You see the Frax chart. I love this thing, man. It's arguable that there's opportunity cost deploying capital here, but this thing is a deflationary asset. This reminds me of, Curve is obviously a disinflationary asset, but what could potentially happen with Frax shares is extraordinary. A deflationary asset has a strong inclination to just go up in price. So while you may see opportunity costs currently, um, that doesn't last forever with a deflationary asset. It's not disinflationary. This asset is full on deflationary. So that's something to consider, especially when you see a candle like this and then, accumulation wicks like this. I mean, that's extraordinary, these accumulation wicks. Then another rip, then a healthy retrace back to the 15 min 200 EMA. Extraordinary. Let me hit some comments, then we'll look at the AVAX chart. I'm accumulating Matic while everyone sells for Avalanche. It may or may not be a good strategy, but at least they have one. Now, yes, we have to have convictions in our strategy, and accumulating from, just take note, accumulating from where? For instance, if you have stablecoin positions that are emitting, Matic, that's all good. You're just getting Matic, accumulating Matic, which is likely an asymmetrically appreciating asset over enough of a time horizon. That's wonderful. So watch your principal assets because we want to protect our capital and grow our capital. We don't want to take necessarily excessive risk with our core portfolio, our principal assets. We want to go up only. I like to think in predominantly up only mode. If you're deploying stables, you're getting free assets. That's these incentive systems, that's these monetary policies, that's the way it's designed, and it makes perfect sense. We're going to start seeing sovereigns deploy incentive systems, especially as the CBDCs roll out. Obviously, capital controls, that's mutually exclusive, but incentive systems to use currencies. You don't see it enough. And right now, you don't see it as prevalent right now. But right now, the only incentive system is tax breaks, and the monetary policy, which is interest rates. So obviously, less of a an interchange. The Fed funds rate, you're incentivized to take on more debt. So the incentive systems are pretty antiquated, deprecated, and pretty pathetic in all regards. But you actually see real incentive systems, I believe, because that's exactly what we're seeing play out in the DeFi space. These are monetary policies, and they are extremely effective at driving interaction, consumption, transactions, work. Look at the amount of work that's occurring. The productivity in the DeFi space is extraordinary, and that's what's really absent in legacy finance in many regards. Gillis is in the house. Andrew, are you building your Frax position from holding? Yes, both. So I took on a very decent Frax position at like $3. I remember seeing it 280 for a while, so now it's at $6. That's doing nice. I think about like 60 grand worth of Frax at like $283, give or take. So Frax 10, 12, 10, 11, 12, 13% yield. And right now I have stable coins that's earning Frax, FXS, which builds your position. It just grows your position. You're getting emissions on stablecoins denominated in an asymmetrically appreciating deflationary asset. That's crazy sauce. But I know folks want to talk about Avalanche, and I want to play around with it. So I got my tab up. I didn't name it right. AV Avalanche, and I'll walk you through the process of how to get capital over there and really how to figure out what's going on. And you know me, I focus on a free AVAX position because I don't necessarily want to USDT because I don't necessarily want to deploy directly to AVAX directly, coming off such a rip to the upside. So how do you play something like this? I mean, look, you're way in Teal Guppy's land on the daily. Let's look at the shorter term time horizons. So much like the rest of the market, we're finding support on the 200 EMA, 200 EMA down on the 15 min. That's pretty nice to see. So unless we see, a significant lack of bullishness in the broad macroeconomic environment, it's all connected. We're not just talking about the crypto space. I don't see it necessarily breaking down from the EMA. The 200 EMA I find extremely strong. The 200 SMA, even stronger, which is why they talk about it. The 200 SMA on the daily for Bitcoin is the almighty bellwether of Bitcoin bullishness and bearishness. Pull up that chart. But I have the daily. See, this gray line is the 200 SMA. And folks like to say if you're above the 200 SMA on the daily Bitcoin, you're bullish. And top it all off, we have a 50 SMA, 200 EMA bullish crossing coming. So that's really nice to see. This is very bullish, extremely bullish. Let's pull it to the 30 and see how much wiggle room we have below the 15 mid 200 EMA, which is nice. And it looks like we're at a price support right here. It's the previous high candle body closes on two bullish rips. So if it breaks below here, you're talking about maybe you have some support at the bottom candle here, but otherwise you're going down here. So you'll quickly drop from 50 to 36 in a bearish event. And that's what's so important for folks to understand. If you're deploying capital into a volatile asset, Avalanche is hot. Keep going very strongly. But when it gets bearish quick. And things drop really quick. And that's just the nature of the asset classes that we're dealing with. So a $50 to $36 drop, yeah, that's what's in the cards. It's right here in the technicals. And if it rips through 36, it's going down here to 30. You're not going to have a massive full retrace necessarily in the short term, but you break out the fib retrace, no reason you can't come all the way back down. I mean, this is still 22 is still significantly appreciated as compared to 12. So no reason you can't have a big fib retrace. So this is not for me. I wouldn't be buying something like this. That's not how I would play Avalanche. Now, I have some capital. I have some Ethereum. I have some stables that are unlocking. I have a couple of Ethereum I'd swap over. I have Frax. I have, if it loads, I need a higher power machine. What am I doing? Load? So I have something like 80 grand worth of stables that I'll move over and I'll play around with some stuff. Let's see what it has. This is the staking page. Uni V3 Frax USDC. So I have look at that total liquidity that's provided. So I have a decent Frax position, FXS, as you know, which gives me a multiplier, gives me an entire 1x multiplier. But I also added a time lock on these deposits, which gives me a 2.082 total multiplier and about $87,000. So 2x times the bottom, I'm getting 70% on $87,000 denominated in FXS, an asymmetrically appreciating asset. If I'm making $1,370 a week on stable coins, there's real big food for thought, guys. So yeah, you're going to get tempted and want to throw capital over to Polygon, over to Avalanche, over to Phantom, over to Solana, what have you. Just because you're going over to another ecosystem doesn't mean you're necessarily going to have a better risk profile. You're going to do better. And I always tell folks, you're not in this to make as much money as possible. That's the biggest fallacy of rational capital investment. What you want to do is make the best risk adjusted returns. You want your portfolio to be in up only mode. You want to grow your capital. You don't want to see your capital go down. You don't want to take 50% of your portfolio, throw it into something at $50 and watch it go down to $36 on a deflationary impulse and have to deal with the emotions. All right, now I'm a bag holder. Is it going to go back past all-time high? You don't want to deal with that anxiety. I sure as hell don't want to deal with that anxiety. So I allocate capital with these ideologies in mind. Let's hit the comments. Living amongst them. Good morning. Happy FXS staker. It's a deflationary asset. It's ridiculous. Absolutely ridiculous. I own Matic and saw some disturbing tweets last night that were deleted calling out. Yeah, I saw Andre and Banteg's talk. I'm a lover. I'm not a hater. I think they're great. I think they're ridiculously skilled and talented and extremely strong programmers. Their contracts are extraordinary. So, yeah, there's a lot of tension about what's better, what's good, how to do things, how much risk to take with code. And I'm a programmer myself. So I see Andre's code and I'm like, yeah, that's appreciated and that's good examples. And then I see Uniswap's staking code and I'm like, cool. That's great. That's appreciated. Code is code. And what matters is how much is a risk profile from a developer perspective, how much it's consumed. So when I'm looking at third-party libraries for like the Android platform, I want to see some good forks on GitHub. I want to see good consumption. I want to see if there's extensive bugs in the bug tracker, and I want to make sure that it's tested to some degree by the broader community. And it's the same exact thing that I do with the crypto space, which is why I'm never early and never late. Other people are going to throw their capital around like there's no risk whatsoever. I'm going to let them throw their capital around. And then let's see what happens. And it's happened plenty of times where, I haven't deployed capital. Some protocol has a vulnerability. And yeah, that just reaffirms that my ideology is appropriate and well suited for the way I feel the most comfortable and the way I'm able to sleep the best at night. The captains in the house, we can do better. So the first thing I like to say about Avalanche is the most obvious. Looking forward to deploying capital. I'm in no rush. There is no rush. You're not going to miss out on anything. If I've learned anything, and I've hopefully taught everyone, there is always an opportunity in plethora. There's always something new, always something to take advantage of, to capitalize on. There is always something. Take your time. You're not going to miss it. And if you follow your anxiety, you follow the FOMO, you're going to buy the top. You need to find your patience, your comfort. Look, put a buy in at 46. The whole 46, and you break through the 200 EMA on the 15 min, and AVAX on Twitter is going to be like, oh, it's just a dip, and it probably just is until it breaks through the 30 min 200 EMA and heads the 40, and now that's a buy target. Now you're getting a discount. And interestingly, look, you remember when I said the bottom of the wicks? Just so happens that's where the 200 EMA is on the 1 hour. That's a nice support zone, boys and girls. I don't have the 200 SMA, the 100, or the 50 up, but those are your other support regions that you could look for. And this is where you get your deals on your back test, on your shakeouts. Certainly would not buy up here. Certainly, this is the first dip, albeit is on at the top of the guppies on the 1 hour, so that's nice to see. We could zoom in a little bit. But look, the teal guppies are gone on the 1 hour. Oh, stop going. But there's no reason it can't backtest the 40. That would still be ridiculously bullish price action. And then you look for a bounce, you look for a breakthrough. Let's say you got to find your resistance levels. So a good resistance, 44, you wait for a 44 and then a retest and the flip to the higher high. So a good entry, 47. I'd watch for it to dip here. I watch for it to break above there, fall back down, retest, find resistance, flip support, and then entry, let's say 46, 47, give or take. And that's the type of strategy I would deploy. You got to wait for that big rip to the downside. That's when you buy things. You don't buy necessarily when they're going up. I consolidate when things are going up, which is why I've been accumulating more and more fracs. I mean, they just give you it, so it's really easy to accumulate it. The best part is you're given it for providing stable coins. Ridiculous. Ridiculous. Some comments. Christopher, my man, says Noah. Chris was doing some research on the Frax USDC pool on Uni. Are you in this pool? Yes. Do you have Frax stake to get the 2x boost? Yes. Seems like you have to have a lot of FXS stake to get the full boost. Oh, yeah, big stake. So my stake right now is for 2x boost I had a 1 month lock on these, and I got 2 months 2x boost. I have a fair amount of Frax. I have 23,144 fracs, which is about $150,000. So I'm getting 2x boost with a 1 month lock on $87,000 in stable coins with $140,000 in frac shares. So can't argue with that. A lot of folks' sentiment is that Ethereum L1 is a bit of a whale game. So I appreciate that, and that's exactly why we talk about Avalanche and Polygon. And I played Polygon, boys. So I play the games. You go to the bridge.avax.network, if it loads, and you're able to bridge over assets as desired. For me, it'll probably be a bit of Ethereum, and they recently added USDC. So USDC will get bridged over, and I'll play with some of the stuff. There's multifarm.fi. Quite interesting information. You go over to the AVAX tab, and you're able to see. So this is obviously relatively small. This is really critical, folks. Never early, never late. I'm never early. I'm certainly never late. But this is all brand new. This is all brand new. You're talking about $250 million in a new protocol. Now, I got no problem with seeing a new protocol take on that much liquidity in a short period of time. But come on, if you're talking about a risk-adjusted return opportunity, you know, we got Curve, which has been around for a year and a half, is a staple of the DeFi ecosystem. If you're talking about risk-adjusted returns, that's very high because your risk is very low, which has been proven by countless billions of dollars of capitalization and even more billions of dollars of transaction velocity. So I don't want to deploy $100,000 to something that has $1 million in liquidity. I can't see myself doing that. Or even Pangolin, which is hot, but it's got 200 mil. I don't need to deploy to it. At least not right now. I wait. And look at these appreciations. Incredible, 22% in 24 hours. Take 100 grand, you make 20 grand in a day. Lydia, 84%. But you have to pull up the charts. Pull up the charts. And if you're going to play that game, buy low, sell high, you're talking about capital gains. And that's a pain in the ass from a tax perspective. And I intentionally avoid that type of wealth accumulation strategy lately. And I really like to focus on yield because yield is just income. Makes things nice and simple. It's like you grabbed some contract work or a second job. It's income. And that is very appealing to me. I want to simplify the way I attack these markets. This is a really cool source of information. They actually pinged me shortly ago on Twitter, and I'm not much of an interview kind of YouTuber, so I gracefully declined to do such an interview. But I'm I would be silly not to offer folks knowledge of the existence of this kind of information. Information is everything, boys and girls. You're able to make better decisions, and that changes our odds. I mean, come on, this actually tells us the assets that are deployed on the chain. And you could really look into things and get a sense of what the heck's going on. So what do I see? I see everything's just barely starting. This is early. Early, early, early. And you guys are welcome to take your risks accordingly. I mean, if you're 22, you have barely any bills, it changes the risk profile significantly. For myself at 38, I have a very different risk tolerance. Very different. Let's hit some comments. Igor, no, just missed the entry monologue. Don't worry, you'll pull back. It's a monologue a day. Miss Hacker, always a pleasure. Um, Beefy has been a bit time tested. It started on Binance Smart Chain. It was hot on Polygon, and it's an auto compounding type of system, which obviously may be even more optimal as is more financially optimal as compared to directly deploying to Pangolin. So the bridge, you're on Ethereum when you bridge stuff over, when you want to interact with protocols on Avalanche, you switch to the Avalanche network. Boop. So Beefy only has 6.24 million deployed. Things barely getting started, boys and girls. Yields are nice. 281%, 1,420%. So that's cool. That shows a lot's going on, but 1,240 with a double volatile asset pair. So it's food for thought. You see the APYs and you get tempted. That's actually quite interesting. AVAX, 1,044. Huh. On Pangolin as well. APY, so that's because of the compounding. So the APR is much less. If you go over to Pangolin directly, you'll see that the APR is, probably a couple hundred, 200%. But when you start compounding stuff like that, it goes over the 1,000 real quick. So these are, it's Lydia. That's yep, 7.8. It's a very low market cap. So it's expected to be extremely volatile. Of all these positions, AVAX would probably catch my eye the most on Pangolin, no less. That's interesting. They add the liquidity, you provide the LP tokens to Beefy, and they automatically handle the auto compounding for you. Huh. Not a bad spot to deploy some capital potentially. But because paired with a stablecoin, you have a risk considerate profile. Stablecoin paired pool positions have a decreased tendency to depreciate. They'll depreciate less than having a full risk on position. But you probably want to keep your eyes on Avalanche and the broader market. If the market is bullish and Avalanche is bullish, um, it's a nice place to park capital. But how long are you going to park it? Let me give you guys some food for thought. So 1,000%. Where is it? Here, 1,044% on Pangolin. That means you have to have it there for a year. So if you park $10,000 in there, you'll have $24,000 in in 1 year. So you made $14,000 in 1 year. Now you're not. That's if the price didn't change at all. If Avalanche goes up 2x, you're not going to get 2x return because it's stablecoin paired. You probably have if you have $10,000 worth of Avalanche in there with $10,000 a die, and Avalanche goes up 2x, you're not going to have 20,000. You're not going to have 10 and 10, 20. You're not going to have 40 won't have 30,000. The Avalanche position will be offset by the LP balance. You'll probably have like $25,000. So that's called impermanent loss, boys and girls. And so these are this topic right here is why Bancor still has significance. Bancor and their impermanent loss compensation mechanism, where they transfer the impermanent loss to the monetary policy, is extraordinary. I'm very much looking forward to Bancor V3. As you see me here thinking and talking with pause, I'm doing an opportunity cost analysis. Clearly, 1.44 thousand is a heck of a percent return on two interesting assets, and particularly this asset pair. But I do have to consider, obviously, impermanent loss, how much time I would deploy the capital there, and other opportunities on other chains. Now, here's food for thought, guys. I'm looking at Beefy Finance. We're talking about Pangolin, which is hot, uh, the hot capitalized AMM on Avalanche, but we have the vast majority of the incentive system, the 180 mil that Avalanche is throwing around, is yet to be deployed. And where is it going to go heavy? Aave and Curve, which are yet to deploy to Avalanche. Now, we know what happened with Aave and Matic and Curve on Polygon. That was a big deal, and that was a way to build a free Matic position. Now the same thing's going to play out, obviously, with with Avalanche. And the second Aave deploys, is going to be a capital rush. Capital is just going to flow in. Aave is Aave. It's the bank of the crypto space. And those incentivized returns are going to be quite interesting. And Curve's going to be extraordinary as well. And Curve has already proven and shown empirically that its incentive system works on Polygon. So I'm sure that that will carry over real quick, promptly, to the Avalanche ecosystem. Um, so I don't need to rush. That's probably the best thing I could say about my sentiment. While I love cheap transaction fees, I'm able to interact on the Ethereum chain. Not at 111 Gwei necessarily. I'll wait for it to go down. That's pretty expensive transactions. Not really wanting to spend $100, $200 a transaction. I don't mind really 20, 30, 40, $50 transactions at this point, which is why Polygon and Avalanche are awesome to consider. But that alone does not provide me enough encouragement to deploy capital at the moment. I'm probably more interested in waiting to see more capital flow over, maybe another billion or so. I'm also interested to wait for Aave and Curve to deploy to see what opportunities are available there. I want something with a very considerate risk profile. I would like to build an Avalanche position. That'd be very nice. But I would like to do that with stables, not necessarily with a volatile asset pair. 1,000% on AVAX die on Pangolin auto compounded by Beefy is nice, but I don't need it. Maybe that's a fortunate position I'm in. Can't argue with that ideology. Can't argue with that. Um, Jacob, it's a stable coin pegged to FTM. Very cool. Yeah, there's a bunch of awesome stuff going on with stables and Rye and a lot of change of tune with regard to stables. USDC, how they're talking about fitting into banking regulations and even Tether. The tone is changing. Um, I think we're on the verge of a lot of systemic change. I mean, yesterday, Visa and Budweiser started dabbling in the NFT space and being very public about it. I think in short order, we're going to start seeing companies start to buy DeFi protocols. I mean, come on, if a bank throws $250 million in front of Pangolin, come on. So there's a lot of money that's out there, a lot of liquidity that has been thrown around at the sovereign level. So that I could easily start to see acquisitions by companies, and they're profitable. The problem is they don't have the human resources to manage the software that they want to buy. I think that just like we had in 2009, we'll have a rush with demand for Solidity and Viper devs, blockchain devs, folks that understand what the hell this stuff does and because the companies sure as hell want to buy them from a financial perspective. These protocols are making millions of dollars a day in transaction fees. What company bored in their right mind wouldn't want to buy these protocols? Check Trader Joe and Banqui on AVAX, of course. I know all about it. And what's most obvious to me is capitalization. 216. Let's take a look at it real quick. Pretty good. No, it's capitalizing. That's not what I want to get in. When something is starting to get capitalized, that's not when I want to start to participate. I want to wait a little bit. I like the iconography. So I'm not going to buy Suck My Fat Toe coin. I'm just going to throw that out there, everybody. I'm not interested in Suck My Fat Toe coin. Okay? Now you can get totally degenerate and make a huge amount of capital. You got to pull these charts up and watch exactly for what I tell you guys. You watch for the irrational exuberance that throws it up 500%, 1,000%. You watch the early buyers dump the crap out of it, and it'll retrace to a support line, to either a price action support, a trend support, or a moving average support. And then you could buy in, and the irrational exuberance will take it even higher. So there's a huge amount of capital to be made with an increased risk profile. I sure as hell am not going to provide liquidity to just almost all of these assets. And I'm probably not going to play a capital gains route, buy low, sell high. I'm just not interested in spending that much time in front of the computer. But what do I want? I want a free Avalanche position, which I could a risk-free Avalanche position, which I could attain with stablecoins. I'm interested in a little bit of an Avalanche stablecoin paired position. So that has a moderate risk profile. That's interesting. It's dollar stabilized, as I've talked about historically. I'm interested in the Ethereum derivatives. We'll see what's going on. I have to look into that, and we'll see what other protocols are catch my fancy. You got to remember. Look, folks are throwing capital around an Avalanche. Meanwhile, Ren's been around since March 2020, and they're bridging everywhere, cross chain everywhere. So there's protocols that transcend any specific chain, and you'll have to have a longer time horizon. But I think you'll have a decreased risk profile. You'll have a constant revenue stream, and that's what I focus on. If I can make an extra $2,000 a day, why would I want to increase my risk profile necessarily? Food for thought. Um, what did I miss? What did I miss? Miss Hacker, love it. Love Bancor. Excited for V3 with the dual mining rewards. Yeah, big stuff. They have Tomb FTM pool that pays high APR with minimal and permanent loss. There's no such thing as minimal and permanent loss. Um, doesn't work like that, my friend. When you have a double volatile asset pair, you got to watch the charts on two assets, and it's a stablecoin pegged to. Oh, well, that's interesting. All right, Jacob. Well done. You caught my eye. I'll consider that. That's very interesting. Tomb FTM. That's interesting. So that's the type of stuff that catches my eye. What's your sentiment on Oh My's Go? Not much. Andrew, haha. I saw Bud bought the beer.eth for 30K. Yep. Um, interesting though. Where did you acquire your original FXS position? I bought it on 1inch. I buy everything on 1inch. Expensive because their contracts are heavy, but they give you the best slippage. Um, some of those assets they're funny, killers. Turns out that Cum Rocket asset, yeah, go figure. There's another one. They're doing a lot with the porn industry. So, not that I would ever advocate, nor am I currently interested whatsoever in those types of assets. I think there's a lot of capital, obviously, in that industry. Just saying. Um, so that did caught my eye because obviously, from a stupid token standpoint, I'm not interested in capital gains types of plays. But what I like is revenue. I like transaction fees. So if there's a way to capitalize on the amount of transactions that go on in that type of industry, that's a huge amount of transactions. And so I keep my eyes open. The point being, I guess I'm trying to make is historically I've always shied away from memes and food coins and shit. But more and more nowadays, I like to peer through the madness, as I've always said, and see certain assets for potentially what they are. Now, if there's an opportunity that's consistent with my ideology to capitalize on transaction fees primarily, I'm not going to let a food name get in the way. Ice cream from, oh my God, from from Cream Finance. Ice cream is exactly consistent with my capital allocation ideology. I just haven't deployed. I don't want to spread too thin. But that's a perfect example of something I historically shied away from. But ice cream um, is there. That they have the curve tokenomics and very interesting. Um, winter in training. You want to go fully Degen? Go watch Messi stream yesterday. I'm going. I no. He's great, and I'm talking with. I'm going to talk with Messi and Taiki on Sunday. I'm going to stream with them, and it's important to have fun with the space. And he's brilliant at that. Brilliant. Messi's brilliant at that, and Taiki's brilliant, obviously, with exploring the protocols, has a bit of an increased risk profile as compared to me, but is obviously capitalizing very well. They're both have Messi's old school, and he's done things incredibly well and is brilliant in countless regards. Um, they both have increased risk profiles as compared to myself, which is exactly why I want to talk with them. I need to expose myself to ideologies and thoughts and protocols that are not necessarily consistent with my own ideology. That's the only way you grow as a person, to have these types of conversations. And you got to have fun with this shit. It's very important to have fun. So I'm going to have a lot of fun. I'm talking with them on Sunday, 4 p.m. Eastern Standard Time. Maybe I should get a banana suit or something. I love it. I love it. The biggest question is, where does it stabilize to actually retire? Um, I don't know. That's a good question. Like curve, it's like I make like 2 grand a day, give or take. Um, if it dropped to $1,000 a day and a 50% reduction in daily revenue, pretty sure I could retire on that also. I don't know. There's always going to be that anxiety of how long does it last? Or can I lose my income? But isn't that the same anxiety we have with our jobs? So we're trading one job for another. I missed a lot of comments, but I tried my best. I'm going to wrap up the stream. You're welcome, Jacob. Yeah, you got it. That's an interesting one. Tomb FTM. Pete, BNT is built different. Yes. Bear in mind, Bancor is old school. They're 2017 boys, so quite interesting. Mammoth Ice on AVAX. There's a billion assets that are hot. The other one besides Cum Rocket is Treat. Yeah, see? Folks know about stuff. Now, if I didn't talk about these things, it's not necessarily on my radar, but if I didn't talk about them, I wouldn't be considering the full extent of what these assets are. And I'd potentially miss opportunities. I'm very careful when I deploy capital. I'm never early, never late. But if there's something that's obvious, like look, I don't think I had Frax a month and a half ago. But when something is obvious, it's obvious, and I take action. Captain Messy Pumpin' NRV, and he's correct. All right. Where will the stream be with Messy? We'll pop it on Twitter. Best BSC bridge and best BSC bridge and built AVAX and Sol bridge. Um, can I get transaction fees? They're like Hop Protocol. Why is Hop not doing something like that? What's NRV? Got to get me looking at this real quick. So Hop Protocol, you can provide liquidity, and this is cross-chain liquidity. So if I could provide USDT, I'm getting yield on stablecoins. Now you guys are talking my language. See, 38% of the day doesn't get me excited. There is no FOMO in this guy. It's doing very well. That's cool. So 500% in 30 days. Anyone put $1 million in there? Probably, maybe one person. I want to all-time low. Wow, it's old school too. Huh. Interesting. Let's take a look real quick. Treat airdrop. NRV is VC bait though. Uh-oh. XNRV. I see those X assets. Single side staking will be used for voting governance. 1-to-1. 5% of token emissions, no exposure to impermanent loss, of course, no deposit, no state time, voting power. 5% of all token emissions. I would need some more solid tokenomics than that. It's not catching my fancy. Tokenomics. BEP20. BSC. Every 3 blocks. Sushi swap model. Third of I hate this shit. I hate 2/3 vesting. 10% for treasury. I'm sorry. Not catching my fancy. Not catching my fancy at all. Anyway, I'm going to wrap it up. Wednesday, August 25th, 12:17 p.m. As always, I thank everyone for joining. More streams, obviously, this week. It's only Wednesday. We got Thursday and Friday, and I'll talk with Taiki and Messi on Sunday. We'll have fun with that. Let's keep the party rolling. I look forward to talking about all the degenerate awesomeness. We're going to have a lot of fun. I'm going to have to find a suit or something. I got to keep up with those boys. I got to go get my moon boots out of the war room. And we'll have a good time. And there's plenty of capital gains opportunities, but you guys know I'll have to talk about technicals and entries because we're not going to buy the top. We're not going to be the bag holders. I won't. Probably won't buy anything. But we'll keep a little bit of rationality going on, and we'll see what kind of opportunities are available. And you know me, if there's something that has a risk minimized tone to it, where I could generate positions using stables or get transaction fee revenue, that will be something that I'll definitely make mention of if I'm going to deploy a fair amount of capital. I have like a 80, 100 grand, give or take, that I'd probably deploy if there's something that really caught my fancy. I wish you all a good day. I'll see you tomorrow after party in Discord. See you then. Peace.